Hi, this is Jackie Schoelerman with Coldwell Banker Global Luxury here in Palo Alto, California. Last Friday, I was watching a webinar between David Childress with Keeping Current Matters and also Jimmy Burgess with a wonderful coach with the Berkshire Hathaway. And the information was so powerful that I wanted to share the information with you as well. So let me share my screen with you now. People don't believe what you tell them. They always believe what they tell themselves. The number of homes for sale continues to be higher compared to last year. As you can see, the number of homes in the green bar shows that the number of inventory of homes has been steadily increasing. Active listings between the 2017 and 2019, which we call those pre-pandemic years, shows that the normal pattern of how the inventory comes on the market. Typically, the inventory increases between May, June, July, and August, and starts decreasing as we head toward the end of the year. The active inventory and the active listings between year 2020 and 2024 is illustrated in here. It shows that during the pandemic, the inventory level really went down drastically. Started at the beginning of the year was pretty good, but then drastically it went down. But then as we started going into year 2021 and 2022, 2023 and 2024, the inventory started increasing. The inventory topped 1 million for the 5th consecutive month. So as you can see, the area in the gray is again pre-pandemic years, and the areas that they're in the color shows the after the pandemic. And then the white bar, or the area, the line for the white area, is the 2025. That shows that we are now beginning to start looking similar to what the pre-pandemic years were as far as the inventory. So what if the active listings count increases by 17% year over year through the end of 2025? So if we just project what the inventory is going to be between now and the end of the year of 2025, you can see that that pattern is going to be very similar to pre-pandemic years. The price cuts are higher than the past 5 years. On an average, in September, almost 20% of listings had price reductions. Now, the knowledge is power, and that's really why I wanted to share this information with you. Where housing inventory is growing the fastest compared to pre-pandemic norms, inventory in the West and the South has effectively recovered. Home price growth is moderating. Home price appreciation seasonally adjusted year over year. That shows that, in February of 2024, the home price growth was almost close to 7%, versus in July of 2025 is about 2.3%. 8 in 10 potential home sellers think that they will get their asking price or more. Home price trends vary by area. Year-over-year change in home prices in 50 largest metro between August 2024 and August 2025. So you can see that the areas in the green bar have had increase in their prices, and the areas in red bar have had price reductions. Now, the Fed forecast and the future 30-year fixed mortgage rates projections is that by the fourth quarter of 2026, we anticipate that the mortgage rates will be somewhere around lower 6% interest rate. Now, mortgage rates could ease in the years ahead. The 30-year fixed rate and rate projections as of October 14 of 2025 is that by the end of 2026, or the fourth quarter of 2026, we're probably going to be somewhere between 5.9 to 6.4%, but most likely in the lower 6%. For over 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury yield. As you can see here, that the spread between the 10-year Treasury yields and the mortgage rates the spread has been around 1.76%. Now the spread has narrowed over the past couple years. As you can see that in 2023, the spread was 2.76%. And by the October of this year, that spread has been decreased to 2.16%. What determines the mortgage rates? The 10-year yield and the spread above it. If the 10-year Treasury yield is 4.14% and the spread is 2.17%, that translates to a mortgage rate of 6.31%. The 10-year Treasury forecast up to the fourth quarter of 2026 is going to be somewhere around 3% or slightly above 3%. But if the spread was normal, the increase in the spread above the 10-year yield. Now, if the 10-year yield is 4.14% and we go back to our normal spread of 1.76%, that would translate of 5.9% for the mortgage rate. Now, if the yield is again 4.14% and the spread is 2.17, which is what the current spread is, translates to a mortgage rate of 6.31%. With expectation growing for a rate cut at the Fed's next meeting, this could be just the beginning of a stronger housing market heading into the fall. Lower rates translates to stronger buyer demand. 2026 home price forecast, that shows that the average of all these forecasts still for 2026 is that the home prices are going to increase around 2.1%. Now the estimated home prices performance for the next 4 years from between 2025 and 2029, you can see in here that they are projected to be somewhere between 2.42% all the way to 3.57%. So for the home buyers that are still sitting on the sideline thinking that the home prices are going to go down, they need to get back in the market and buy their home before these prices keep continuing going up. And when the interest rates go down, all you have to do is to refinance. Home sales are expected to rise. As you can see that for 2026 forecast, there's going to be over 5 million homes that they're going to come on the market for sale. The next 90 days between November, December, and January of this year, 80% of mortgages have a rate under 6%. Mortgage rates on all mortgages evaluated by number of loans, second quarter of 2025. So you can see that the most of the homeowners have interest rates under 6%. Do you know what this number stands for? 49, 36, 14. Who can tell me what these numbers represent? Here, let me show it to you. Home values, equity, and debt. These are all in trillions. That shows that 49 trillion of homes, the value in the United States is $49 trillion. Almost 36 trillions have owner's equity. That means the homeowners own their equity about 36 trillion in the United States. And almost 14 trillion have home mortgages on their home. As I decided to share this information with you, please share this information with anyone that is dear to your heart and you want to also share the power of the knowledge with them. Now, if you would like to have these slides, just all you have to do is contact me. Direct message me or contact me, and I'll be delighted to provide these slides with you. I look forward to speaking with you.